Let's have a good week, everybody. Hiya, Brock, Kevin. Everyone doing okay? Hope you had a good weekend. Dollar coming in stronger, following through from the reversal on Friday. Very sneaky reversal. Really, I talked about the end down here on Friday, coming off this red line. Blake had some fibs down here. I can't chase it here. So, I don't see a lot for me to do right now. I have to say I'm a little surprised that with Dixie following through to the upside, that the S&P's risks likes it. And something I feel that is likely now that especially Friday, we had this market looking pretty ugly up until the last few hours. And then we had this candle. So if you notice at this high right here in Nasdaq on my platform, the high was 11,071.20, and the high here was the same exactly, 10,071.20. So, people that started shorting Nas here, with stops over the high, confidence probably built more. I'd say there's quite a few buy stops above this high. In fact, one of the questions from an attendee was, "Is this or was this a double top, or are we going to see continuation move above it?" So I think there's an alternative for that. It's not a double top, that we could take it out, but it not be a breakout. So looking for a stop hunt here sometime this week above these highs. And so, how do you trade something like that? You let it take out this blue line up here, let it do whatever it wants to do above the line. Then, next time back under the double top, you take the sell signal with the high of the rally above the blue line. Everyone get that? Good morning, Monica. I think it was you that asked about that on Friday. It was $1 million question. Okay, so regarding the dollar, looks like the Fitch downgrade had no impact on it. Okay, Steve's back, Amira, for your platinum. I know you've been, no one's covered platinum for a week. So I hope you and your catalytic converter are okay. Oh no, they're using palladium now. All right. So taking a look at same thing with the yen, I can't buy it up here. I would be interested on a break back down to here. Ideally, what I would like to see, and over the weekend, I thought it was possible. I'm not sure now that if the dollar did make a new low, same to you, Mark, uh, that if the dollar made a new low, like towards 92, that US dollar yen could put in a higher low around 105. So just because it hasn't happened yet doesn't mean it won't happen. So I'm trying to be patient with it. Looking at WTI, this spike down here really was the target. You had a $2 range here. We broke down under this 40 and a half and almost reached a measured move here. So if there's more life left in the stock market, crude back over this 40-80 level might give it a chance to blow to the upside one more time. But 41 is going to be the key. So we get through 41, we could challenge these highs. So, I'm sure that the team has a lot more ideas than I do today, but those are my ideas. Looking at the euro, I don't, excuse me, I can't short it here. I'm not confident enough to say that the dollar hasn't bottomed to um, sell it either. So it's one of those days you come in and you go, well, you know what? I don't know what to do. And if you don't know what to do, what's the right thing to do? Thank you, Zig. Well, I hope you're right and we get one more rally in the dollar. Okay, so uh, that's about it. Gold, is having some trouble making more upside progress. Look at, this action right here, you know, looks like some type of ending diagonal. Sure doesn't look like that on the daily. It's, your first down day. But I'll tell you something. I've scalped it from the short side, already taken half. Something that makes me want to keep going for it here is the article, I think it was on Bloomberg, about the gold squeeze coming because everyone wants delivery of their contracts and there's not enough gold. Those are the kind of stories you see floating around after a huge move in the market. So maybe I'm thinking we might have the weakest short squeeze in history if I'm right by the end of the week. We'll see. So that's it. I want to invite everyone who's here who hasn't done it yet. If Face is helping you, it's great to have a two-way street as we give every day. The way for you to give back is to join, become part of our family. It's not charity, it's an investment in your own trading career. And if anything, if you just look at it, you're hiring a lot of people to do all this work, right? All this work from, different styles of analysis. Okay, so you're right. There might be a better, this is Greg's look, isn't it? Yeah. So 1650, that was a freebie. So I don't think we're got quite down to the buy zone before we get another high in euro. Maybe it's another 100 pips or so. 1650 it looked like, eyeballing it. So good luck today, everyone. We're always rooting for you. How do you join? I'm going to have you just go to the website. I'm going to have my partners put the link up for you, Hugo. And there you go. There's Joe Perry. You could work with him. Joe's kind of a mark. You might even be able to grind him down on semi-annual or annual subscription. He's not a mark. He just wants to help people. That's why he's here. So with that being said, how are you, Blake? How's it going?
It's Monday. How you doing?
Okay.
It's Monday. It's like, man, I can't believe it's 3 o'clock in the morning and it's a Monday.
Yeah.
What's
I was
going on,
glad
man?
I got up at 12:30
Oh,
and
why?
AM. No, I was glad that I could go back to bed for another 3 hours.
Oh God, that's good. Yeah, that is good.
When you get up and you go, sometimes you get up and it's 3 o'clock
I hate
and
that. Yeah.
all you have is like an hour.
Yeah. So
But you wake up and you see 12:30 on the clock, you go, oh God, I have another 3.5 hours.
yeah.
Yeah.
So, I had a good weekend. I hope you had a good weekend. I mean, it's hot here. It's
Yeah.
brutal. So we didn't do a whole lot, but it was nice just, having a couple of days to really not
Sleep
think
in.
about much, you know what I mean? And that's
Yeah.
that mental break is always important, especially, when there's some of us, I know not everybody, but some of us that are still in quarantine. I know there's a lot of people, like, I mean, you look at Steve, who he'll be back with us today, but he was on vacation. It's nice. It's got to be nice. I haven't been on vacation and I can't even tell you the last time I've been on vacation.
Yeah,
It's
me
been
neither, man.
Come on.
Whatever. You're always on vacation. You guys are
Come on.
always on vacation. I think the last vacation I took was to Napa
Yeah.
in October of last year. That was it.
I went to the hospital for an overnight stay.
Hey, that's kind of exciting. At least that's a change of pace, right? I mean, that's cool. No, just kidding.
Yeah, yeah.
Last place I'd really want to be right now. Anyway,
All right.
but really, what I want to do is, because I know Steve's going to be here today, uh, uh, I want to give enough time for Steve and Stelios to give their views. What I'm going to do is I'm going to put together the bias chart. But if you guys didn't see the week ahead video with Chris Weston, I'm sure most of you have, but if you have not, you should listen to it because, first of all, we have we've put together a relationship with Pepperstone Securities. So if you want to get Forex Analytics free for a couple months, all you have to do is um, uh, uh, open a live trading account with Pepperstone. If you're not in the U.S. and Canada, and you got to do a couple of live trades, and then you can get Forex Analytics for free. And then if you are still in the U.S. or Canada, then you can use Forest Park FX because we still have a relationship with them. But one of the reasons why we did a relationship with Forest Park FX is they have offices in. They just opened their office in Dubai. They have office in Australia, in Melbourne. They have one in London, and I want to say in Asia too. But anyway, they've got a very good global reach, and we're going to be doing a couple of projects with them and moving forward. And especially those of you that are in the Latin America community, you're going to have more exposure to currencies and analysis than you'd had in the past. And we're partnering up with Pepperstone Securities to do some of these projects. So, but some of the benefits to that is just acquiring more analysis from very skilled analysts and delivering that to you guys. So I hope you guys enjoyed the analysis from Chris. We were very much on the same page looking for continued dollar strength going into this week, and that's what we've seen thus far. We've seen the dollar look stronger. Now I'm a little bummed out because I was really trying to sell some euros up at the 118 level today. I was really hoping to, and I was selling it last night. Actually, I was selling the euro dollar last night in the 60s, just kind of scalping around as we were dropping through here. I just haven't. I haven't established like a position. It was more of a just kind of shorting it a little bit, but that doesn't mean that I won't get short the euro today, or I won't play the dollar long. But I do still think that the dollar is in a bearish state. I think we're just getting a little bit of a bounce. So and hopefully, like I said, you guys watch that week ahead video so you guys understand my point of view and where I'm coming with the market. But what I'd like to do, like I said, I'd like to get all the analysis done for you, so this way we know where we stand. So let's go to the euro. Let's talk about the euro dollar. So the euro is still bullish while we're above this broken trend line. Now let's make sure we note what that broken trend line is. That's a trend line that was broken since 2011 or 2008. I'm sorry. This 2011 in the dollar index, I believe. That trend line comes in roughly around 116. I'm going to say roughly about 116, but you can see the 161% extension of this move, this last move, will bring us all the way down to 116.20. I expect a bounce there. All right. So if we get down there, I mean, I'd be a buyer down there of the euro dollar should we get down there. I still think it's bullish. Now, just because, this is where it gets a little tricky when you're looking at the bias chart. just because I'm bullish the euro doesn't mean I'm bullish the euro today. Okay. I want to be clear that the euro dollar overall is bullish. Today I still think we're pulling back a little bit here. Okay. So anyway, resistance today for the euro, in my opinion, is going to be 118. If we can, get a move back here, that's kind of how I view the euro at this moment. If we can see a move back up to 118, it's probably a good selling opportunity back at 118. Okay, but overall, it's still bullish. Support. Well, let's talk about the cable. So the cable, I think, is in a bull flag pattern. 38% retracement comes in at here at 129.70. And I think it's, well, actually, you know what? I might have to take that back a little bit. The problem with the cable, in my opinion, is we stopped at the 161% extension of this move, horizontal resistance. We didn't quite make it to 132. I sold some, and I'm still short some cable, but I'm more in the I think I'm more in the camp that the pound is actually more range bound right now than bullish. I do think that if we get a pull back towards 128, and a quarter is going to be, give us an opportunity to be on the long side down here. But where, how far back are we going to be able to pull back here in the cable? So 129.70. I'm also going to write down support at 129.10 just in case things continue lower. Okay, resistance for now is 131.15. Okay. All right, let's talk about the Aussie. So the Aussie, this is a little bit of a scary chart with the Australian dollar. Okay. One of the, I think, bigger issues right now with the Aussie dollar is, well, first of all, we have the RBA tonight. That's something to think about. Well, it's tomorrow morning in Australia, but these little false breakouts are, a little concerning to me. 70.70 is going to be pretty key support, and we're almost there. We mentioned that a lot last week, and the risk that I see with the Aussie, and actually I need to mark up this high too. That's 70.30. Okay, those are both levels of support there. The problem with the Aussie dollar is that we had a false breakout, and that really does concern me. So resistance right now is 71. I mean, if we get back to 71.80, I think people are going to be really happy to get out of the Aussie. I still think we're bullish while we're above the 70.30 level, 70.70, but it's walking a fine line here from turning from bullish to range bound. Kiwi is another risk with another currency pair that's showing, some, potential for some downside. We had the Kiwi that, we were just kept brushing new highs in this channel. Now, if we drop below 66 cents, that's a risk, right? That's pretty key support. Matter of fact, I need to put an asterisk next to this. So I think that's key support. I mean, 67. Do you remember the 67.10 level? Why it was resistance? Because that was the bull or the cup and handle completion was 67.10. That's exactly where we went, and that is resistance. All right. Uh, you know, I'm really torn whether to be marking these up as bullish or range. I really am. I think the Aussie is more bullish than the Kiwi, but that can really change this week, especially with the RBA. And remember, New Zealand, has employment data. Is it employment data? Yeah, actually, Wednesday morning in New Zealand, Tuesday afternoon. So tomorrow afternoon. So these are very questionable here. Very questionable. I'm going to leave it bullish for now, but I don't feel comfortable doing that. Dollar Canadian. So the dollar Canadian, really big pivot off of support last week at this 32.30. What's really important about this whole support holding is that we didn't make new lows. Now, in the Canadian, if we get above 134.70, it will be, or 134.75, that'll be bullish. Oops. I didn't mean to do that. There we go. It's still range. Support, we held the 618, 133.80. I remember now on Friday, I bought the dollar Canadian at 131.81, right at that 618. I played it to the long side, sold it for like 20 pips on Friday. Then it came down and dropped just below that into the 60s, like high 60s, and then it bounced again. But yeah, I was playing the dollar Canadian on the long side on Friday. I remember that. I do a lot of trading, so so 133.80 is support. Dollar Mexican peso. This is actually, you know what? I'm going to come back to the dollar Mexican peso. I'll come back to that. Let's go over to the Swissy. Oops. Swissy had a really big rally today, and it's interesting about the dollar Swiss. It rallied from like nowhere that I see it being important support, no key fib levels or anything like that at all. Right? It was in between, the broken support here, the 127% extension. Maybe it was, I could see if it was, but
you trust it less a turn because it didn't happen at an important technical
yes point. For me, yes, that's a good question. Yeah, if it's not, look, that's even past the 261% extension. I guess it was close to it, but when it's in between fibs, yeah, I don't I won't play it. You know what I mean?
Thought so. That's why I wanted to.
Yeah, but that doesn't mean just because I won't play it, it doesn't mean anything. But
that too.
But you have to imagine this was channel support. Did you just snort?
Yeah. Call me Mr. Piggy.
So any dip now at 91.50 should be supported.
I did it again.
You did.
Never used to laugh like that.
One of the risks about the Swissy is now we're back above this breakdown point, or we're testing this breakdown point. So this is all very important. Resistance. And you can see I have an alarm set here, and I've had that alarm set there for 2 weeks, actually. I know I do because I remember it. So 92.40. We have to get above that to really squeeze, but I still think we're in a bearish trend, but the risk is turning. Let's go to the dollar yen. So the dollar yen, notice since 2018, any dip below 106 or 104.60 got gobbled up. And I was trying to short the dollar yen on Friday. I actually remember trying to short the dollar yen on this rally, and I closed it out for a loss. It was a very aggressive move. And I'm like, I remember it's like we were at 105, maybe 50 or so. And it just kept grinding higher. Now, I mean, knowing that it's got so much support down there, and a lot of it is merger and acquisition, M&A type of flow that's going through the market. Anyway, I just, it's tough being short down here. So resistance right now, let me check something else here real quick. See, the 50% retracement of this entire move comes in at 107. So, I mean, that's resistance today. And I'm going to keep it on range and support. You have to imagine a lot of people are still caught short. So now any dip down to 105.50 is going to find buyers. I got to hurry up here. DXY. I mean, Steve hasn't talked for a week. I mean, he's got to be all wound up. Like he's got to, like he's going to have verbal explosions coming out today. Right, Stelios? I don't even know how Stelios is going
to. I've already left for holidays. He's back. I'm going. No, I'm not. Let's see.
Yeah, lucky you guys.
Well, you know what? We're getting more and more cases now, so I think we're going to be going into lockdown again. Anyway, we'll talk about that later. Yeah.
Look, really did?
No
Sorry?
way.
You really do?
How many people live in Greece? In Athens?
10 million in Greece, 5 million in Athens, roughly.
5 million in Athens. We have 5 million in my area, and we get 3,000 cases a day. Beat that.
We got
it's up to that, Blake?
Our record was 110.
Oh yeah. No, we do 2,000 to 3,000 cases a day. Yeah.
We do. The U.S. is doing 50, 60,000 a day now.
Oh. Yeah, it's awesome. It's great. Let's see here. 94.50, as you guys know, that's going to be resistance. 94.50. I mean, I'm still bearish the dollar, but as I told you guys on the week ahead video, I was expecting, a bounce in the dollar, and I think we could still bounce all the way back to 95.50 without much of an issue. So just because I'm bearish the dollar doesn't mean I'm bearish today. I have to make that clarification as we go through this bias chart. The bias chart is great when it's going counter trend, or when it's going, with trend. But when we have counter trend days like today, and probably a lot of this week, you're going to see moves happen counter trend. But I mean, that's part of the market. The market's not always moving in, with the trend.
Waves.
That's right. And so when you're going counter trend, Dale, do you take bigger positions or smaller positions?
I don't expect as long of a ride.
Yeah.
On the wave. And
matter of fact, let me see here. This is if you take this move, this is an hourly, right? You take that move, 127% extension of that last leg lower, comes in right around this resistance. So actually 94 is going to be resistance as well. So a couple levels of resistance today, and we're pretty much almost there. Support for the dollar index. I mean, this is an inverted head and shoulder pattern that's building. I know it's hard to see on a 4-hour, but on an hourly, you can see it. It looks something like this. We could be building. So that would mean, as we build this out, that means support comes in at 93.40. All right. Like I said, I'm going to come back to the dollar max. US dollar, Norwegian krona. Let's talk about this one for a moment. This is obviously a commodity currency. Crude's bouncing back from it was below 40 bucks. It's bounced back to about 40 bucks. But look what the US dollar Norwegian krona has done for the last month. We've sat down here as the euro continues to blast higher. The US dollar Norwegian krona stop going down. I'm going to be very interested in the US dollar Norwegian krona if we break this downtrend line and basically this previous support, which comes in at 920. This is when I become very interested in the US dollar Norwegian krona. Just letting you the note. Okay, it is in a bearish trend, and support is at 9. Period. But I am interested in a counter trend move if we break above 920. Okay. And let's talk about the dollar Mexican peso. So we have now broken this downtrend line in the dollar Mexican peso. I think that this is really key, this key support zone. So 22.28 to 22.20 is going to be really big support. Okay, we are actually turning well. I need a daily close above 22.35. So just so you guys know, before I turn bullish. But resistance right now is at 22.63. And one of the things that's really important about that resistance is if we break through that, then now we're starting to make higher highs, and that's a big deal. Lower or higher lows, and then once we break this, we start trading up towards the 70s. That means we're breaking higher highs and higher lows, which is a recipe for a counter trend move back up towards 23.50, 24. Okay, but it's not just the US dollar Mexican peso. Look at the rand. Look at the ruble. Right? You think about like these emerging market currencies. I was talking to a very good friend of mine on Friday. He was talking with one of his Mexican business owners, friends, like, you know, that owns big businesses, not like a small business, like it's a big business. He thinks that the Mexican peso is going to be the next Argentina. That's a big statement.
Wow.
You know what? Have you seen what the Argentinian peso has done?
Over my career, Blake, I've seen so many devaluations in Argentina that you know, it seems to happen every decade.
Yeah,
they have different colored money. That it's happened so many times. They have blue and green and different colored currencies, and all of them down there want dollars.
You look at like the peso and you know where we've gone. And by the way, that low, you know who called this low right here? That low right there.
Me?
Jim Cramer.
Jim Cramer called a low in the peso?
Jim Cramer called the low. Do you know why he called the low right here? I was watching that afternoon his show.
Oh, the 2013. Yeah.
Actually, it was in the morning. I'm sorry. It was in the morning, and I was on the morning edge.
Wow.
And some people might remember this back in 2011, because I was so irritated. I was doing a counter trend trade. There was like, I want to say there was like a big 161% confluence right here at like 9/11 or 11 and some change, and I got long, and I was long, and he got asked, you know, about the peso, and he says, "Oh, the peso is going to strengthen. The dollar Mexican peso is going down below 10." And I was like, "Screw you, Jim Cramer!" I remember I was so irritated, and I was telling everybody on the morning edge about that. And I was long, and that was literally that last day that we spent down there.
Booyah!
Booyah! That's right. But that
Kudlow and Kramer.
Okay, let's talk about the S&P. I'm sorry, I keep taking away from Steve here.
A
Steve's
nice
dying to
trip
talk,
down
so-
memory lane, Blake.
It was. Big resistance is going to be 33.16. We're almost at resistance, 33.16, 33.16. Support is still 3,200. Oh, and by the way, 3,300 is still 3,300. Okay. Last but not least, gold. I'll make gold really easy. We are on support, by the way, 1900, 1920. And then this, nothing's changed, right? This, everybody knows, is the same data from Friday. Whoops. Okay, your bias chart's done, and this is bullish, and this is bullish. Bullish. U.S. dollar Norwegian kroner is still bearish. Okay, yep, this is all good. All
Release
right, so
Steve. Release him.
release the Steve.
The Steven.
Release talking Steve. Steve, are you here?
I'm here. Good
Oh my
morning.
God, he's ready to
Hello.
go. How wound up is Steve? No, just kidding with you, Steve. How's it going, man? How's it being home from vacation? It's got to be awesome being home from vacation, right?
Oh yeah. A dream come true.
Dream come true. I honestly, like, I really envy you guys, and I'm sure Dale does too. I mean, we can't even go anywhere. I mean, yeah, it's really. I think about everybody everywhere else around the world that's vacationing, and
Americans are driving all over the country right now, Blake.
they are. I
Spreading
mean, well, right now, like one of the problems where we live is we can't even really go camping because all the camping spots are all taken, and
Yeah.
I mean, because people are just they're doing anything they can just to get
I
out.
read that RV sales
Oh yeah.
have hit records
Through the roof. My buddy just sold his RV. He made a killing on it. He bought it for like 2 years ago. He bought it for 40 grand and flipped it for like 50 something. And he was using it for the first couple months of the pandemic. Yeah. So he did really well with it. So
nice.
Yeah.
So
Rarely
yeah,
do you buy any kind of transportation unless it's classic and make money on it.
yeah. Anyway,
That's really says something.
Elon Musk will tell you, Teslas do that.
They don't appreciate.
That's how that's what they claim on occasion, which is really funny.
Okay.
But yeah, it's weird. I mean, you see so many things
That are weird.
Nowadays, right? I mean,
Yeah.
we it's like we changed the era within a few months.
yeah.
Right into the twilight zone.
Well, guys, Steve, I want to welcome you back. I'm going to let you take over, but I know everybody's missed you and, missed your analysis. So everybody have a great day. And remember, if you really want to take advantage of Forex analytics, and if you're outside of the US or Canada, go open a Pepperstone trading account, and then you could get Forex analytics for free for a couple of months. So that is a great deal, because not only are you look, there's a few of the big brokers that are FX brokers in the world. One of them happens to be Pepperstone, and they're one of the biggest in the world. And there's a reason why they are, is because they offer exceptional, support and prices. So I'm actually excited to, be using their tools, since I can't trade with them. But I know, there's actually somebody on the team who uses Pepperstone, who has been using them for years. And then there's more of our partners, or our guys from our team are going to be switching over. So it's an exciting partnership for us.
Indeed,
yes,
it is.
Indeed.
Steve, Stelios, Dale, you guys have a great Monday, and everybody
Blake.
else out there, have a great one. I'll see you on the week, or I'll see you on the daily roundup for those of you that are Forex Analytics subscribers. So I'll see you there.
Thank you, Blake.
Thanks,
Thank
guys.
you. Welcome
Bye-bye,
back,
mate.
Steve.
Thank you,
Hey,
Stel.
Steve.
Hey, Dale.
How are you, buddy?
Good stuff.
Okay.
Yeah.
First morning here, quite a few
Let's
things
see
ahead.
if you still have it. You
Yeah,
may have
Okay.
lost it, your edge.
I think so. Yeah, lost it. So yeah, that's enough for today. See you tomorrow again.
Okay, let's start with a couple of points. We had this morning we had Japanese GDP minus 0.6% quarter on quarter. This is the second consecutive negative quarter, obviously after the minus 1.9 we had before. So technically, we are in recession.
Yeah.
Let's see how that continues, obviously, but and it's going to depend on a lot of things. Second waves, I think, unfortunately, are coming. We're seeing it already here in Greece. We had a record number of new cases 2 days ago. Obviously, it's very low numbers, but still, it shows percentage-wise that things are moving again. We also had PMIs this morning in Europe, Norway, UK, all quite a little marginally better than expected, marginally above 50, which again, we need to remind ourselves this is good, obviously, if it's above 50, because this is expansionary, but it doesn't mean that we're back to where we were. It just means we're not dropping like we were dropping the past month. So just to put things in context, obviously it's a good sign that we're not dropping any further, but we have to remember autumn is coming, see how things progress there. And otherwise, it's been a pretty quiet. Risk on again. Equities I think equities want a new all-time high. That's what they really want. The S&P and then they're going to have to decide.
Yeah, I mean, why not?
Yeah, why not? I mean, it makes perfect sense, right?
Yes.
I mean, the in the UK, there's talks and rumors about another set of local lockdowns, and same in other countries, and it's just I honestly don't see how we can get anywhere near normality again. But clearly, the markets think we can. And if you look at
I don't think the market thinks we can. I think the market thinks doesn't really matter. You know what I mean? More lockdowns equals more universal basic income, because let's be honest. I mean, what they're doing is more or less. I've never been a conspiracy theorist. Quite the opposite. My opinion has always been that don't pay attention, because the vast majority of them, of course, are BS. But one thing is always the case. No matter what type of a crisis you get, it's always also an opportunity. For governments to try out things and for central banks to try out things.
Yes.
So, I don't believe that COVID, for example, is a manufactured crisis or any of that. But nevertheless, it is a crisis. It is an event that allows for quite a lot of experimentation in let's call it economics, although probably it's quite the opposite.
Yeah.
So I think the market focuses on the fact that the major companies that are driving the rallies are companies that are actually not being so negatively affected in the short to medium term by lockdowns or any kind of restrictions that have to do with COVID. On the other hand, that will release more stimulus, both in the form of monetary policy and fiscal policy, which, in essence, as I've explained, it's a distinction without a difference, in the sense that, yes, of course, fiscal policy and monetary policy are two different tools, but when you have over-indebted governments doing fiscal, easing, using 100% freshly printed money, in essence, it's another form of monetary policy, right?
Yeah.
So I think the market mostly focuses on that. There is a huge put in play, almost globally, at least, in all major economies. And, okay, lock it down again. We're going to get a few more trillion and it's going to be fine.
Yeah, nominal values go up, but really, in real terms, it's a different story.
In real terms, we can see the huge depreciation of all fiat currencies, and the easiest way to notice that is by seeing what gold has been doing, not just this year, But we were warning some time ago that it's not by accident that gold was in essence hitting all-time highs against the vast majority of the currencies, and we said that it's a matter of time to be at all-time highs against the dollar. We're there now, and I think there is more to go, because let's be honest, real money is gold. Everything else is some type of credit. So I think we have more to go.
Yeah, I agree. And I don't see how things are going to change on this front. But anyway, so I think what else is happening? Very little, actually. Yeah, I mean, I think we can just go to the charts. I don't have anything else to say this morning.
Okay, Stel, do we have anything else coming today?
Later today, in about an hour and a bit, we have ISM manufacturing.
Manufacturing, yeah.
PMI, yeah. So that's going to be interesting. Although economic data doesn't matter anymore, but still, we'll wait for it and see what it does.
That's quite true, actually. Yes. Okay. Nice. So let me open chat box, question box, and let's see what we have.
You remember how it works?
Yeah. I mean, yeah. I vaguely, but yeah, I do. Okay. So let's see. Blake covered, quite a few things. He started by saying that, he believes, and if you haven't watched, I'm gonna say the same thing that he did. If you haven't watched the week ahead video with him and Chris Weston, you should definitely do so. So he talked about the possibility of the dollar strengthening, for a period of time following, the huge move of weakness that we've had. Undoubtedly, the reversal that we saw on Friday was quite a nice one. I mean, the daily candlesticks were quite telling. Whichever of the major currencies you look at, it's more or less the same deal. And the DXY as well. DXY actually produced on Friday bullish engulfing right on this horizontal support resistance area. Having said that, you need to keep in mind that it was trading at levels we hadn't seen since May 2018. So we have to go back to more than 2 years to find, these lows. Now, what type of rebound are we getting here? In my opinion, vast majority of the chances this is a corrective rebound, and the areas I would be looking for this to stall and turn lower would be initially this previous low on 94.65. At the same time, that same area would produce a retest of this broken long-term ascending trend line support because it passes from the same area. So in essence, it would be acting as resistance confluencing with that previous low. I think there's a good chance we're going to see a reaction from there. Now, of course, there are other levels we can examine if that doesn't initially hold, but that's a first area to be looking at, and we take it from there. Having to do with the euro, there is a nearby level of support which I'm curious to see if it's going to work. It's this long-term descending trend line resistance. You see, it dates back to that high we had in 2008, which was almost at 160, right? So this trend line that dates back to that 160 high, we broke through it. What was it, like 10 days ago or whatever it was, and we should be back testing it roughly at 116.50. So that's one possible area of support. Now, if the euro wants to produce like a deeper pullback, which there is a decent chance, the next area we'll be looking for would be that previous high at 115. As I mentioned about the DXY, I think the same thing applies here. Looking to buy a pullback is the way to go. Same deal with the cable. Cable has broken through this long-term descending channel. A back test would be more or less retesting 129. From 129, we can see more buying interest coming through the market. Aussie USD, we had mentioned a long time ago the importance of this long-term descending channel. You can see it if I zoom out. Dates back to 2013. You can clearly see it here in purple. We falsely kind of broke above it. I say kind of because, I would never be buying that breakout. I mean, we had one day that we actually closed like just a few pips above it. So, not exactly the kind of breakout you would be buying. Then the next day we had this big reversal lower. That was Friday. And today we seem to be having some continuation lower. So it's not to say that, from here we're going to turn all the way down and we're going to produce lower lows. I don't think that's going to be the case at all. But I do think that, this move from 55 cents all the way to 72 cents, quite a formidable move, especially considering, that we're talking about effects. It's not like a stock that can soar or plunge, by, a big amount per day. I think we should at least see some type of a deeper correction. Of course, all these moves and pullbacks, especially having to do with commodity currencies. So let's say the Aussie, the Kiwi, here's the Kiwi, still hasn't broken through this ascending channel, by the way. The USD CAD, here it is. So the USD CAD, all these are going to be helped immensely if we see some type of a risk of coming through the market. So far, there is, absolutely no sign that the market is about to turn lower. There is definitely, a very, very clear loss of upside momentum. I mean, we've spent quite a lot of time, barely moving higher. So, clearly there is not a lot of momentum to, to push, considerably higher. But, this slow drift to the upside, hasn't stopped. Especially the Nasdaq is, very, very close to all-time highs and producing new all-time highs. Above this 11,050 more or less. The next upside target would be 11,276. That would be the 127% extension of this latest pullback that we had. And above that, it would be more or less 11,500, where we find the 161.8% extension. So, clearly we can see more days of, this slow drift higher, but at some point we should see risk off. If that happens to be, as long as the dollar is attempting to rebound, that would definitely help it somewhat. So, especially against commodity currencies, we should see the dollar do quite nicely, although I think it's going to only last a few days, perhaps a couple of weeks, best case scenario, before we can see more dollar weakness. Now, having to do with metals, for example, we're seeing some dollar strength coming through in the FX market, but Friday, for example, was a positive day for gold, and Friday actually produced a new all-time high, both intraday and on a daily closing basis here. So today, we're a little bit negative on the day after having pushed to new all-time highs, but needless to say, this is far away from being a candlestick that would really make you want to short gold. Don't forget that we've seen several candlesticks that look a lot more formidable than the one we're trying to put here, that didn't even manage to put a dent in this market. There is still a lot of buying interest in gold because there are still a lot of clueless investors that hadn't figured out that gold had only one way to go, at levels that we were trading even a few months ago, and that was higher. So now many of them are trying to jump on this trend. I have to say, admittedly, quite late in the party. It's not that I don't think that gold is going to move higher from here. I do think that gold is going to move higher from here, but I don't really think that this is the place that offers you any actionable risk reward to be short, to be long as we speak. So unless you're, really willing to buy and hold like for years, in which case, yeah, I think you're going to be doing fine. Even if you buy up here, I don't think as a trader you should be buying up here. I'm not saying it can't move higher before it corrects lower, but I'm saying that really there's no risk reward, because just by looking at this chart, you'll notice that there is no real area of support until we get back to like 1815. So the closest area of support is like $150 lower. So what are you going to do? Buy here, hoping that we can move another $150 higher, before seeing even a pullback? I think it's probably not the best of ideas. Now, silver is also putting some kind of consolidation. Clearly, the past few days a little bit weaker than gold. Keep in mind, though, that it needed to take a breather. I mean, just by looking at this massive move in the gold-silver ratio. I mean, the gold-silver ratio had a rally, beginning of September 2019, it was roughly at 80. And then from September to March, it actually moved from 80 to 130. Keep in mind that 130 historically is like, a high we had never seen before. And then a round trip from 130 to 80 from March to a few days ago. So yeah, at some point, the gold silver ratio should, take some type of a breather, and silver should take a breather against gold. That's what we're seeing at the moment. Keep in mind that 80 is still, decently frothy as a gold silver ratio. I mean, historical average is 60, perhaps a little bit lower than 60. So we can even keep on moving lower from there. Although, probably the biggest part of the move has already happened. I mean, the move from 130 to 80, and especially in the time it took to happen, I don't think you can expect something similar to happen from 80. So, the easy, quote unquote, of course, money has already been made in that trade. Now, silver is taking some type of a breather. Needless to say, there is a very, very clear area over which there is no point in being bearish, and that's the breakout area that was in essence multiple resistances we broke out through. And proof that this was a huge area was the way in which silver accelerated once it managed to break through it. I mean, once we managed to break through 1930, silver just exploded higher. So, some type of a breather, some type of a consolidation, like, we drew several days ago, should take place. There's two ways something can correct. One of them is, through, a price change. The other one is through just spending time consolidating. Sometimes, almost every time, it's a combination of the two. Sometimes it's a lot more in price terms than in time. Sometimes it's almost only in time. Examples, many of them, for example, here in gold. Gold suffered a very, very short-lived correction back here in March. This was clearly a correction in price, because in a very short period of time we went from like 1700 down to 1450, and that was it. So it was very short-lived but quite sharp. You can also see the exact opposite. I mean, you might get now in silver like a correction that's not going to be sharp in price, but it might be prolonged in time. So any of the two can happen in any combination, as I said. In any case, first area of support here should be $23. We might spend some time consolidating like between 25 and 23. That's like the most bullish case scenario. There's another scenario that we might just move lower. I think you should be, hoping for a retest of 19. Unfortunately, I doubt we're going to have that chance in buying $19. I think the chances are quite low, but who knows? I mean, the market. Was that it? Was it so short?
Well, you have a lot of pent up ideas that you couldn't get out in one session. Right.
Okay.
So, anyway, so you're back in the saddle, bro. Thank you very much. And
who do we have today?
Sounds like you need a vacation from your vacation. Grayson Rose, who wrote the book Trading for Dummies, it saved my trading career, being a dummy. So anyway, so I thought I'd give Grayson a little visibility here. He's also very active on stockcharts.com. They do a show there and great content. So like David Keller, they're associates, plus he has his own business. Anyway, let me just take it away with Grayson and
perfect.
We'll find
and
out.
We'll be back here tomorrow as every day.
Yeah, every day back in the coal mine. All right, buddy.
Indeed.
All right, take it easy. Grayson,
Okay,
I'm gonna get you set up now, buddy. Okay.
Perfect.
Welcome to Face.
Thanks. It's good to be here, Dale.
Yeah,
well,
nice to meet. Really pleasure
it's good
to meet
be
you,
here,
Grayson.
but it's also it's early. There are times when I think being a West Coast investor is great, and then there are times when I do something like this and I go, nope, I'm moving to the East Coast.
I know. My life is like a farmer.
Really, I thought being a European trader is the best time zone because you get both Europe and US session.
There you go.
Yeah. So we definitely we're up before the roosters.
There you go.
So I used to say, Grayson, my life is like a farmer, asleep. Up before sunrise, asleep after sundown, except that I nurture seeds of greed for the harvest of commissions. You never did anything that, cynical, did you?
Nah, try not to, but.
All right. Well, if you'd like to share your screen
sure.
on Zoom, it's that green box.
Yep. There we go. You got me?
All right. So there's your stock charts. And Grayson, I've been to your website, read a little bit about your journey. You want to tell our attendees how you ended up in the business? I think you were trading the markets in high school.
Sure. Yeah, my journey's kind of interesting. So, it actually kind of goes back to my dad's journey. So I'll talk about him for a sec. He was went to business school in California and started a company and had the luxury of retiring early. So for my entire life, he was just a full-time individual investor. He just sat around trading the markets all day. And when I was a kid, he kind of saw me looking over his shoulder, saying, "Hey, what does Dad do for a living?" Because really, the only career that I had ever seen him have was being a full-time investor. And so around age 10, he started showing me stock charts, not our website, but other charts, and just kind of teaching me about technical analysis in the stock market. And
was he doing them by hand back then, or
no?
He
wasn't doing them by hand. He was actually using stock charts. He was using a couple other platforms as well, MetaStock, things like that. But he was primarily using stockcharts.com.
Okay.
But he would go online and he'd print out stock charts, and then we'd sit down at the kitchen table, and he'd teach me how to draw trend lines and talk to me about what some of the stocks that he was watching were doing, those kinds of things.
Cool. Wow, you were fortunate.
I was really fortunate. It was interesting. It started off kind of as this thing. I'd sort of expressed an interest in it, but he maybe forced it a little bit and said, "Hey, I really want to teach you what I do for a living and what these things are, what all these lines on these charts are." But over time, we kind of got into it together. And the story I always tell is I was one of those kids that grew up loving to go skateboarding, and so there was a clothing store and skateboarding store called Zoomies that I used to always try to drag my parents to. But it was publicly traded. The ticker was ZUMZ. And so he basically used that as an opportunity to teach me. And he said, hey, that clothing store that you're always trying to get us to go spend our money at, you could own Zoomies. It's a publicly traded company. We could buy the stock together. So that's actually what we did. We opened a brokerage account together when I was, probably 11, 12 years old. And we started buying stocks together. And the first one that we bought was Zoomies. And it hooked me because all of a sudden, I had all my friends and stuff, and we were little kids going out to the mall, and we're walking into the store, and I'm saying, "Hey, I own this store." I'm a shareholder. It felt a little bit different.
Yeah.
But it hooked me. And so I started, trading more and more under sort of his tutelage throughout high school and things like that. And then as soon as I was 18, I was kind of off to the races and trading on my own, and flash forward, 10 years from there. And we wrote a book together. Actually, my father and I wrote a book together called Tensile Trading.
Okay. That was you and your dad, and you work with your brother, right?
No, just me and my dad. Yeah.
I see. That's you and your dad. Okay.
Yeah.
All right. Okay. So
So the story on that book, actually, I'll take a sec on that, is also kind of interesting. So I actually tore my ACL in college. I was a lacrosse player in college, and I tore my knee up, and I had to go get surgery for a summer. And so I basically said, I'm going to be laid up in the house with nothing to do other than rehab and icing and all that stuff. And so I ended up saying, hey, what if we write a book together? So we did. I basically holed up in the basement, working on my knee that summer, trying to get rehab and everything, and ended up writing a book. And a year later, we had it published by Wiley, and we were kind of off to the races.
Was that Trading for Dummies?
No, that was actually
that
Tensile Trading book. Yeah, Tensile Trading: The 10 Essential Stages of Stock Market Mastery. So that's what got me into that Dummies book, because Dummies is actually a Wiley publication, which was the same publisher that published Tensile Trading. And so they came back to me about a year and a half later, and they said, hey, we've got an opening. We want to do Trading for Dummies, and would you be interested in writing it? So it's kind of fun how that fell into my lap. But
I believe in simplicity in trading.
Mm-hmm.
Forrest Gump, people think they have to make it complicated because of all the different algos and black boxes and high frequency trading, but it really, if you just have a couple of simple tools and learn how to use them well, the Forrest Gump trading is, I'm a proponent of it.
Yeah.
So, I only have a couple of tricks. So the key is being patient, waiting for those setups.
Yeah. And knowing them intimately.
Yeah.
I've always said that, because my first sort of dive into charting and analysis was being this kid with a big pink highlighter, actually. So my dad would print out these charts, and they were just, simple line charts of stuff like Microsoft or Zoomies or, anything that was big back then. And so he would print out these charts, and they're just, a single white chart on a single sheet of paper. And he'd give me a big pink highlighter, and we would draw trend lines. And so, he was asking me, what's this stock doing? And that simple lesson of just drawing trend lines and realizing that a stock can do one of three things. It can go up, it can go down, it can go sideways. That's it. And you're just drawing lines to figure out which direction it's going. And I'm a 10-year-old kid there sitting, drawing trend lines on Microsoft, saying Microsoft's going up. And he's like, okay, yeah, good. That's right. That sort of stuck with me always. I flash forward from that 15, 20 years, and it's stuck with me. That sort of simplicity, still invades everything that I do.
Well, it's still going up. That's a great call when you were 10 years old. Microsoft is still going up. A little stall here. So that's a great segue. Why don't we talk about, what your views are with the S&Ps, which, it amazes me, Grayson, that we're only a stone throw away from new all-time highs in the S&Ps after the crash that we had into the March low. I was thinking we get a hell of a bear market rally, but extensions from here surprised me without too many decent corrections all the way up. What's your take here?
I've been surprised by it too. Actually, the chart that I've got up on the screen is just a daily chart of the S&P 500, but I'll flip over here to a different list. And we've got the Fibonacci retracements on this move. So this is SPY, but same still holds. I was watching this 61.8% level here on the Fibonacci levels and thinking, okay, we're going to bounce off of that. We're moving higher. We're going to bounce off of that. And I was picturing this sideways range, just kind of zigzagging back and forth between these two levels. To see us break so much higher it's been fascinating. I mean, I'm a price follower, so I'm watching the price, and the gut instinct is, well, the market's going higher, so I'm gonna, that's where I'm gonna position myself. That's what I'm gonna trade. But it has definitely caught me off guard. But how firm this move has been to the upside, and really kind of how unbroken it's been to the upside.
Yeah.
I mean, I think that we got to be going lower at some point here. I mean, I'm kind of thinking, I'll go back to this daily chart.
We haven't filled that gap yet, Grayson, have we, from the highs back in March where it gapped down? See that gap on your chart?
Which one?
It shows up on stock charts too. Back in February, March, before we started crashing.
Oh, yeah.
It's a big gap.
You're right.
I don't know where that would be filled, but it's definitely eating into it, at least right now.
Yeah, that's true. I want us to go back down. I mean, I'm saying I'm a price follower, but here I am, putting opinions in the market. I want us to go back down to somewhere around 3,000. I want us to test that level again. I think that's a healthy shakeout that we need. I'm kind of picturing us getting through sort of the excitement of earnings season and fading back down somewhere to that level. And hopefully,
when will that be? Earnings season done mid-month?
Yeah, mid-month, late month, maybe. We got some of the stragglers that come in late, so maybe as we get through those. But I still really want to see us retest that 3,000 level. I think that we do that before hitting the 3,400 level, before testing those all-time highs, like you're mentioning.
Okay. One more shakeout.
I think we get one more shakeout. I think we need it. I mean, it's funny to see. It's such a funny year because you've got. The S&P 500 right now is up a little bit more than 1% on the year to date. But obviously out of those March 23rd lows, I mean, we're up huge percentages. Yeah. So it's two completely different feels. If we were sitting here having sort of taken out March and April, if we were sitting here on a normal year, we'd say, wow, what a flat year. We're up 1%. This is so boring. So, the market, I do think it could go higher. I do think we will test those all-time highs sometime this year, but I still want to see us, shake things out a little bit more after such a big run out of those lows in March.
Yeah, I was reading, even with this big run, I think it's AAII, only 20% bulls.
Yeah.
Is that the right survey? Did I've
got that
list it right?
Yeah, you're thinking of, let's see it, this one. Yeah, there's 20% on the AAI bulls.
Okay.
It's
that's pretty amazing. I mean, as a contrarian indicator, being bearish, you almost have too much company, and we're about, so can the majority could be right. Some people don't think that ever can happen, but I've faded the majority at times and seen the majority steamroll me.
Yeah. It's funny. I think that's one of the best indicators that we have, actually, is when everyone thinks they're so clear on a thesis. We see this all the time with Twitter. I love Twitter, but there are funny things about it for sure. And the last example of this was, coming out, if I go back to the S&P 500, in April, everyone that I was listening to was saying, including myself, I had the same thesis. I was sharing it too. Everyone was saying, oh, this is just a dead cat bounce. We're going to bounce up a bit, maybe to 2,800 or so, and then we're going to fade lower. We're going to go retest those lows.
Right.
And when you see everyone saying really the same thing, just like you're saying, Dale, it's an indicator of, maybe things are going to go against the popular thesis.
Okay. So any sectors that stand out to you right now that you're paying attention to? And maybe you could talk a little bit when you show us the chart, some of the things that major points that you made in either of your books. So, we take away not just forecast of the market, but the way you look at things.
Sure. Yeah, so let me go over here to this is a list that I keep of the S&P sectors. And what I've done here is it's kind of all focused on something that we have at Stock Charts called the Scooter. It stands for Stock Charts Technical Rank. And basically what the Scooter is a simple measure of technical strength. It's not intended to be a look at one thing and make a decision type of indicator, but it is intended to be a measure of technical strength or weakness. So what's interesting about the Scooter is that we basically bundle things into groups. So for individual stocks, we bundle things into small, mid, and large cap buckets. And then within those groups, we compare everything against each other. So, within the large cap space, for example, we assign everything a Scooter value, and it's the same formula that's applied to everything in the group. We apply everything a Scooter value in that group, and it's between 0 and 100. And so that anything that's 100, that's up close to 100, is going to be stronger than something that's down at 1.9. So, for example, here in the sectors, these fall within our ETF group. So they're actually in a broad space with tons and tons of ETFs. But all of the sectors, including SPY, sort of sitting on top of them, they're all ranked in the same group. So what's interesting about this is that you can sort of apply this Scooter filter to the sectors to see, kind of what's strong and what's weak. So, at a high level, we have obviously technology leading the Scooter ranks up here at 92.5, which we've seen, massive outperformance of technology for years now. And we have the energy sector down at 1.9, incredibly weak. And technically, it's just deteriorating. Same with financials. Just to
is that one of the lowest readings you've seen?
That is
for
about
any
as low
for
as
any sector in your.
That is about as low as it gets. I think I've seen the energy sector get down to maybe 1.6
when crude went to a negative price level.
Yeah,
okay. I've been around for a while. Never thought I'd see commodities go negative.
I know. I'm with you on that. For sure.
Right.
So yeah, energy sitting at 1.9 is pretty low. But
what's interesting one of the highest? Is that one of the highest? 92.5? Have you gotten to 99 on anything?
We do. I can pull up the Scooter group, and we've got something that's sitting at 99.9. But
Tesla.
If in the right group, it probably is Tesla. Tesla, I know, is one of the leaders. So here's a page that we call our charts and tools page, and you can get to the Scooter rank down here under summary pages. So if I pull up the Scooter reports, here's what we can see. Yeah, you're right. Tesla sitting at 99.9. Obviously, technically incredibly strong. AMD too, just a beauty of a technical chart. So this is how it works. And so within this, we've got US ETFs, and so we just kind of bucket all ETFs into one group. But within that ETF group, you have all of those sectors, like I was saying, and you have SPY. So what I like to do is put them all under sort of one list, and then I can compare, sort them by the Scooter, and I can see just sort of what's strong on this one filter, what's strong, what's weak. And it's interesting to see what leads SPY. That's why I have SPY in this list. So, what sectors are sort of leading technically on this one filter, are leading the S&P 500, and what's lagging it. And I track this every week. I look at it every day, but I track it every week. And so it's always interesting to see sort of how things shift up and down this list over time.
Would you compare it to Grayson? Excuse me, I'm known to interrupt. Would you compare it to what Investors Business Daily used to do with their relative strength rankings?
It's similar. It's similar, especially in concept. On the back end, we actually publish a formula. You can go look it up in our help docs. We don't try to obscure it or anything. Yeah. It's basically a combination of short, mid, and long-term indicators, kind of all based around actually John Murphy's approach to the market. That's who helped us develop it originally.
Sure, intermarket relationships.
Yeah, it brings in. It's a little more focused on the individual charts, less the intermarket stuff. So more of his work on individual analysis. But
I'm also getting a question from one of our attendees, and I'm sure you've been getting it, Grayson, to people who aren't in the business. They're scratching their head about what's happening in COVID.
Yeah.
And they see everything closed, and the unemployment numbers, and they're asking, why is the market doing what it's doing when the economy has taken such a hit? What do you tell them?
I think this picture actually tells you a lot. So I was having this conversation actually with someone over the weekend, and I was saying what we've seen right now in the COVID era, shutting everything down, so much uncertainty, all that stuff. We have seen a huge spike, obviously, in unemployment. But what we've seen is obviously this transition from a physical economy to sort of I've been calling it a disconnected economy, or a digital economy. Everything's online, and what you see happen in that is that sure there are industries like airlines and things like that are obviously slammed. Restaurants, everything is down, traffic is down, so you're going to see a massive hit to those businesses. But it's offset when we think about sort of the big picture. It's offset by these other industries that are absolutely thriving. I mean, you've got so much attention in healthcare, for example. Obviously, technology with things like cloud computing and everyone trying to connect online is huge. In consumer discretionary, you have digital retail is just booming. So I think that the story really is this split where you might, let's say if you're operating at 100% across all sectors, and then you compare that to sort of pre-COVID, and then you compare that to sort of where we are now. You've got half of the sectors, half the industries that are down by 80%. Airlines are down 80%, let's say, just in terms of kind of traffic and business activity in general. But that's offset by some of these other sectors and some of these other industry groups that are seeing a spike, and so they're operating at 140% of what we originally had before the shutdowns. And so when you sort of aggregate all of that, you bring it together and you say, where is the economy? Well, they kind of offset each other a little bit, and so it actually makes sense that we're not as bad maybe as we sort of originally felt. And you see that.
Let me ask you this: if you had that narrative going, and the Fed wasn't as aggressive as they were, would it matter? The previous so isn't it really? Would you say at least more than 50% the Fed that has generated this? And then we work on the narratives of the companies that are capitalizing on shut-in behavior.
Sure. I think that if we took the Fed out of this equation, I don't think that we would be up where we are right now, over 3,000 in the S&P. But I still think we'd see this general theme playing out where we've got this same, leadership in technology and discretionary and healthcare and some of those sectors that are maybe a little more sort of digital, a little more forward thinking, and a little less impacted. I think we'd still see a similar thing playing out. Would it be at the levels that we're seeing? Yeah, probably not. I think the Fed pressure is helping.
So jet fuel.
Go ahead.
The Fed added the jet fuel. What would have happened anyway?
I think it's some jet fuel. I think it's definitely some jet fuel, but I think a lot of those trends, a lot of those themes, they would still be playing out. To what level? I'm not sure. We probably wouldn't have seen such a massive rally out of the lows, without that support.
One of the most massive rallies, I don't know if it compares to tech, has been the gold miners. Do you have that in your list here at all, miners?
I don't have miners specifically, but what we can look at here is here's an intermarket chart. Kind of a classic Murphy chart. And this is looking back over 1 year. We can see stocks up about, that's the blue line. We can see stocks up about 10.5% in the last year, going back, just a straight year. Obviously we've got gold though up, over 37%, almost 38%. So, that move towards gold specifically in the last, roughly 2 months has been tremendous.
Yes. Yeah. Do you think it still has legs? Or that we're getting to frenetic, when you start seeing articles about potential short squeeze in the physical market of COMEX traders wanting to take delivery and there's not enough gold.
I think it could still have legs, but I think that every step we take towards a recovery in the economy, I think that creates a more and more of a headwind for gold. If we think of gold as kind of this defensive play, flee to safety, like it typically is,
Yeah.
then every step that we take towards getting back to normal, I think is more and more of a headwind for gold. So,
Okay.
if you believe the narrative that things are going to get worse, which they very well could be, then I think gold could, still have some legs. If you believe that the worst is behind us and we're going to, get control of this thing, then I'd say, I'd be looking more at stocks than gold.
Okay. What about the universally accepted belief in yields lower for longer? Because if we, I'm seeing some things in the yen that I correlate to yields. I think the most unexpected event would be the 10-year going back to 2% or better. Do you think I'm crazy?
Hmm.
Go ahead. I could take it.
I don't know. Give me your thoughts. Expand on that a little bit. I'm curious about
Okay.
that.
It's just when things are universally accepted, and I've looked at the 10-year yield, and it looks like a EKG of someone in a coma.
Yeah.
If you look at what 10-year has been doing for a while, and there's an old Wall Street adage, right? I don't know, you're a young guy, but never sell a sleeping market. Well,
Yeah.
if
Yeah.
I've ever seen a sleeping market, it certainly is a yield chart on the 10-year.
Yeah.
And, we've gotten down, I think the low intraday was 34. I think that we may not take out that low, and the next surprise could be, like you said, maybe the economy improving. Maybe it's
Yeah.
because of dollar weakness, but I have a hard time thinking that yields are going to stay down here with everything that's going on. Do you see a resurgence of inflation down the road here?
I could see it. I could see it. We've got this chart up of yields on
Yields?
screen right now.
What do you think? Yeah, see?
Yeah, I
for
could see them heading higher.
Could
You know,
you?
it's a space that's just been so different. I mean, for so long, just seeing yields so low. It's
Well,
pretty
I
funny.
thought
Actually,
that they would yields would recover with this huge rally in risk
Mhm.
that we've had in March, and that didn't happen. So I mean,
Yeah.
they've actually drifted back to their base. So I'm kind of thinking now that instead of having yields go up with the market, that's actually been maybe with valuations helped the valuations because there is no other alternative, and rates are low, pushing people out on the risk curve.
Right.
But maybe what's going to upset the stock market is that yields begin to rise.
Yeah. Begin going up.
What do you think?
I could see it. I like the thesis. I mean, I think it's, like we were talking about earlier,
It's contrarian.
It's contrarian. It's not the common thread, which I like. Actually, I'm maybe more inclined to sort of position that way than the opposite. So
okay,
and I can see it.
We can't ignore the elephant in the room either, right, Grayson? Why don't we kind of wrap it? I know you're a technician,
Sure.
but are you starting to think about if there is an election, what type of outcomes for the market can occur either way, or a contested election where we don't have a result for that's challenged and might have to go to the courts, etc. Do you think it's going to be? I know I'm pouring a lot of questions in here.
No, they're
smooth
questions.
transition.
It's obviously it is the elephant in the room. It is a fantastic question. You said it best. I am a technician first. And so, all of that to me is going to be a reason to watch more closely. It's a reason to pay attention. It's a reason to make sure that I'm following my routines, and I'm watching the charts as diligently as possible. And so, I'm going to react to whatever happens. As far as what I think is going to happen, I think we're going to be just fine. I don't think that that the election is going to be as disruptive as people think. We've actually got an area on stock charts which is kind of fun. There's an area of the site called our historical chart gallery. It's the same page, this charts and tools page. You can get to it from there. And what we have actually is a historical chart gallery of presidential cycles. It's basically, charts for every term. And so it's fun to scroll back through here and sort of break up the market history into all of the different presidents and actually kind of see what's happened. As far as what's going to happen, I mean, this year overall has been so wacky. I think if anything, it's taught me that I am not in the business of trying to figure out, why something's going to happen or what's going to happen in the future, because you never know what's around the corner. I know that I'm going to react to whatever does happen.
Everything can happen.
Everything can happen. And I think we are in a period. Let's say the administration shifts from Trump to Biden. We're still in this. Clearly, we're still going to be in this recovery phase, and so I think in whatever administration we end up with, everyone's still going to be focused on getting everything back on track. How are we helping people? How are we getting through COVID and stuff? That's the one thread that's going to sort of carry us through whatever happens in the election. So I think there's still going to be almost more focus on that than policies and shifts and things like that. So it's a great question though. It's
okay. You know what? I was going to wrap it with that, but I have to ask you one more thing. What's your view on the dollar? Dollar's been under major pressure. I know you probably trade UUP and ETFs on the dollar. Do you think this is a major trend change? A lot of people are saying that now. What do you think?
I think it is. Here we've got the dollar up. I think the dollar going lower kind of makes sense to me. But I do think if it goes anywhere, I mean, we've got some levels here. Kind of, if I actually I'll click into this chart. If we think about the dollar kind of going in this range, between these kind of levels and just sort of bouncing around, I think that makes more sense to me than a continued deterioration sort of below here.
A range.
Yeah. So, a range bound dollar, I think makes a lot more sense. Obviously we're coming off, everyone's been making this big case about the dollar weakness, but it's coming off these highs. So,
so you know what I call your position on the dollar? Strongly neutral.
Strongly neutral. I like that. That is probably about as accurate as I can.
All right. So what's the best way for people to follow you? I know your stock charts is your baby. You also have your own website, and you're on Twitter. If you'd like to show your website, this would be a good time.
Yeah, I am on Twitter. So I would say, follow me on Twitter at Grayson Rose. My other website is Stock Market Mastery. This is kind of what I use for my own personal stuff and for education and things like that. We're actually bringing out a new show on Stock Charts TV, which is our sort of educational show coming to the channel this summer. So, look for that. But go join our mailing list. I'd love to keep in touch with anyone. Follow me online at stockmarketmastery.com or on Twitter. Twitter's a great way to, see what I'm thinking. That's kind of where I get most of my charts and analysis out and all that stuff. So
yeah, maybe you need some FX coverage on there.
Yeah, that is true. I know.
Anyway, I think the dollar is the fulcrum of the wheel that everything spins around. Just my view.
Yeah.
So I really enjoyed our conversation, Grayson.
Dale, this has been great. It's great to jump on with you.
Yeah, you're now my trading warrior brother, and I appreciate you coming in and telling your story. What a blessing to have a mentor in more ways than just markets, with the relationship you had with your dad. You can imagine what people go through trying to find that on the internet.
Exactly.
You really had a leg up, and thanks for passing it forward with your teachings and writings. And really was nice meeting you, Grayson.
Yeah, Dale, it's great to meet you too. Thanks so much for having me on.
We'll do it again, buddy.
Definitely.
All right, everyone. That's going to be a wrap. Remember, don't just count your pips, count your blessings. And we'll see everyone tomorrow for Turnaround Tuesday. Good luck and adios, everyone. Thanks again, Grayson.